Good morning, traders. Welcome to today's market review. This is Razak at CMTrading. Today is March 8, 2023, and today is Wednesday morning. So looking at the highlights of the day, we're watching the markets tumble ahead of Fed Chairman Powell's testimony in front of Congress today. So looking at those major economic events scheduled for today, this is happening at 5 p.m. South African time. Now, simultaneously out of Canada, we have an overnight rate statement, an interest rate statement coming out from there as well. So lots of news coming out, and the markets are already responding to it. So looking at the Forex symbols, the major pairs tumbled versus the USD. And as we look at the indices, the Dow Jones and the NASDAQ both tumbled. And looking at commodities, gold and oil also sell off. And as we look at the stocks, specifically the bank stocks were the ones that were hit the worst. And lastly, looking at cryptocurrencies, Bitcoin sells off as well. So let's take a look at the markets and see what we can expect from today's trading. So here we go. We're going to take a look at the Euro USD, and that's the most prominent one. And we mentioned this. We said it was hitting a resistance-ish level, and this is like clockwork. I mean, you can't time this better than just trading the technicals on it. And we did tumble from 106.99, which is almost 107 for all intents and purposes, down to 105.43. That's over 150 pips on the downside. Now, looking at the other major Forex symbols, starting out with the GBP USD, also tumbling from 120 down to 118.34, not as much as the Euro did, and you can see that quite clearly. And looking at the Australian dollar, also tumbling, and you can see that it's just clear as day how much this is working on just the technicals. I mean, it doesn't get clearer than this. 71.37 was a clear double top for the Australian dollar, and sure enough, we're in that middle side of it at 65. Now, lastly, looking at the Canadian dollar, where it will be coming out with an interest rate decision later today. You see the dollar getting stronger versus the Canadian dollar as it's going up versus the Canadian dollar, and it's a flip pair, so you got to keep that in mind here. 137. Now, it does have a resistance on 139, so keep that in mind. If we do flip above that, it could continue going to 140-ish level. Now, looking at the commodities, starting out with gold, tumbling from 1858 after we sold off, made a bounce, and now we're back on supportish level of 1814. Now, as long as we stay at these levels, we won't see a further decline. However, if we break that 1809-ish level, you can see it quite clearly on a daily chart, we could further sell off down to 1778, an important year just as a American history level, but also important because that's a 200-day moving average support. So keep that in mind. Now, looking at crude oil, same thing. Look at that. Perfect trade. $80 to $79 to $70. That's where it's been this entire time. And sure enough, we hit that 80-60-ish level and then sold off. Okay, we're right in the middle of it. This was probably the easiest trade over the past 3 to 4 months, as it's been zigzagging between that $80 and $70, and it does it again and again. And there's like such easy money here to be made. Now, looking at the U.S. markets, this is where it gets really cool. Dow Jones hit that resistance-ish level, and this is a Fibonacci retracement that we've had for quite some time, and it's held it. Look at that. You couldn't write this up better than it is. I mean, it's right there. Look at it. I'm going to highlight it. Look at that blue line. I'm talking about right there. That's a resistance level. It hit that level and then sold off from 33,500 down to 32,900. And that is a major sell-off for the Dow Jones. And you have volume to back it up, which is even more meaningful. Now, looking at the NASDAQ, also selling off, but not as strong. And this is why I'm a little bit hesitant about this sell-off, because if you look at JP Morgan, that's the one that got hit the hardest, from 143 down to 138. It's a $5 move for JP Morgan. But if you look at the other components, like Apple, it sold off, but not as sharply. Okay, you could see that quite clearly. It's not as aggressive sell-off. This might be taking rotation and waiting until we do have the earning reports coming out from all the high-tech stocks coming out next month or so. So this is something to consider. If we look at the high-tech stocks, they're still relatively strong. Facebook did sell off, but not major. Okay, this is why I'm highlighting this, where it's mostly the bank stocks that got killed because it's the interest rates that affect them the most. Now, lastly, looking at Bitcoin. selling off to 21,998 as it did retrace from its 25,000. 20,000 is a support level, so just keep that in mind as we're bowing between those two levels, 20 to 25K, at least for now. This is Fed Razak, and we wish you guys a great trading day. Thank you.